Whilst there's a lot of planning opportunities out there, there are numerous inheritance tax exemptions that clients often overlook. Gifts made between spouses and civil partners who are both UK domiciled are exempt no matter how much you give to one another. You need to remember, however, if you're a UK domiciled spouse or civil partner and you've married somebody who is non-UK domiciled, this gift limit is restricted currently to £325,000 in lifetime. However, of course, on death, you could decide to also leave them up to your nil rate band of £325,000. The annual exemption is currently set at £3,000 per annum, so per tax year. Essentially, this means that any individual can gift up to £3,000 to any other individual in any one tax year. And if you have not used this exemption for the previous tax year, it is available to be carried forward for 1 year only. The important thing to bear in mind, however, is that you need to use the current tax year's exemption first, and then you can use the carryback exemption of the previous tax year, which essentially would mean that if in the current tax year you gifted £6,000, being £3,000 from this year and £3,000 from last, next tax year you'll be restricted to only being able to gift another £3,000. A couple between them making regular use of this exemption could therefore potentially gift up to £60,000, saving £24,000 in inheritance tax. So it is a valuable exemption over time. The small gifts exemption is currently set at £250. You can give up to £250 to any number of individuals that you wish in the tax year. The important thing to bear in mind is you cannot combine the small gifts exemption with the annual exemption. So in other words, you can't give £3,250 to a particular individual because you can't combine the two. You do need to make separate use of those exemptions. And if the small gifts exemption was in excess of £250, it's important to bear in mind that relief would not be covered under the exemption. So for example, if you decided to give a niece or nephew something like £300, because that's in excess of £250, that even £250 of that £300 will not be covered by the small gifts exemption. Lifetime gifts made in consideration of marriage or registration of a civil partnership are also exempt up to certain limits. These limits pretty much depend on the relationship from the donor, so the person making the gift, to the donee, the person receiving the gift. Basically, a parent can give up to £5,000, a grandparent can give up to £2,500, either party to the marriage or the civil partnership can give up to £2,500, and any other person can give up to £1,000. For the purposes of this exemption, it is possible to combine it with, for example, the annual exemption. So if a parent wished to give, say, £8,000 to their child, the first £5,000 would be covered by the gifts in consideration of marriage exemption, followed by the £3,000 annual exemption. Gifts made out of income will be exempt to the extent that they do not affect the individual's usual standard of living, they are part of their normal expenditure, and they've established a regular pattern of gifting. Income for these purposes essentially means salary or bonus, dividends, interest income, so all those sources of income that may be otherwise taxable to income tax, also including ISA income as well. Essentially, with this exemption, because the executors have to be in a position to be able to prove to HMRC that the exemption applies, we recommend keeping records in lifetime. The best way that we feel you can do this is by using one of the Revenue's inheritance tax forms. That form is the IHT 403 form, which is available on the HMRC website. Within that form, you can essentially stipulate all of your different income sources, all of your different expenses, and that gives you an indication when you've netted off the two figures of how much you could potentially give under this exemption. Outright gifts to charities and registered clubs will be fully exempt from inheritance tax, provided they are made to qualifying registered charities or registered clubs. Essentially, this means those established in the UK, the EU, or other specified countries. Gifts made in favour of political parties are exempt to the extent that at the last general election the party had 2 MPs elected, or if there was only 1 MP elected, at least 150,000 votes were given to candidates of that party. There is lots and lots of information with regards to inheritance tax generally on Techlink, as well as all of these exemptions that your clients could potentially make use of.